In this video, I will be speaking about AUD USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a very strong level of previous monthly demand and support, which is now once again acting here as demand and support. In fact, if we look at the movement that the market has created, we actually have the left shoulder here, the head here, and the right shoulder here. This means that there is the possibility for the creation of an inverted head and shoulders and for the market to create a bit more bullish price action away from this zone. We can also notice how we had the impulse and the correction, and in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a market which at the moment is testing that zone, which is in between the 0.32 and 50% of the Fibonacci taken on this monthly impulse, which is a quite strong level of monthly demand and support, which we could expect this market to potentially reject to the upside. Going down on the weekly, what do we have? Now here on the weekly, we have a market which at the moment is testing resistance. We know that this zone is previous weekly support, which is now turned resistance here. So immediately, it's quite clear that the monthly has support, but the weekly has resistance. This means that if we go down on the daily, there will be a good probability that we will find the market in a range, which is in fact exactly what we can see here. What we can see here from a daily perspective is that at the low, we have a market which is currently bounded by the previous support that we had here, which is still acting as support, which is this one here. And if we clone this and we move it to the top, we can see that at the same time, we also have resistance at the top, which is coming from this previous daily support from which there's rejection to the upside started, which is now turned resistance. Now, until this market will remain bounded in between resistance and support, really cannot be looking for any large movement. Now, I did speak about AUD USD a few days ago. I spoke about it after the creation of this W formation and explained all the reasons for which from here we could expect a potential rejection to the downside, essentially for the completion of the W formation at the neckline, which is what you usually expect after the creation of such pattern. And that is in fact exactly what the market did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, so there is at least a possibility to see the market, if it will break above this resistance and break at that point also above the weekly resistance, shift back to a bullish market, because after the break, all this previous resistance would become support here, and at that point the monthly, weekly and also daily with the COT data would all be aligning for a potential rejection to the upside. So if we don't know if the market will break above this resistance, but if we do get the break on the retest, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.